In today's video, or today's MTPredictor video I should say, I'd like to look at how we use the larger degree trend to help gauge our trading signals. It's a very important video because not only does it show how important it is to use the larger degree trend, but how easy it is in the MTPredictor software. A great example is what we're looking at in yesterday's customer training webinar, particularly on the YM. This is the 3-minute YM, which is the mini Dow which we were looking at yesterday. You can see we had some automatic setups here. First one was against a blue STF, and these other ones here on a red STF look to be losing trades and not do very well. So at the outset this looks to be a little bit tricky. However, let's now overlay the larger degree trend and see what a great difference this makes. Again, we were talking about this in our live webinar yesterday. So let's go to the 15-minute chart, which is what we do, and to start with, even before yesterday opened, so this is where yesterday opened, what we did was go back to the last swing pivot, which was here, right mouse click, place our decision point on, and that gave us our larger degree or higher time frame resistance, and as you can see that caught the very high of the day. If I now come down to the 3-minute chart, you can see what a difference this makes. Let's just scroll back a bit. So there we go, there's our 15-minute or higher time frame resistance, nailing the high absolutely perfectly. Now what we were looking at excuse me, in yesterday's webinar was that because this was an important high, because it came in on the higher time frame resistance, this was the initial decline down, this was the initial rally up, therefore although this TS1 sell was against the blue STF, is what we call our holy grail trade setup. This is because this was a potential wave 2 swing high. So if I put the analysis on, what we were suggesting at the time was that this was a good setup to take on the YM, and if we did, therefore the target was likely to be down here at the typical wave 3 WPT. That was all very good at that particular time. However, let's now see how the market unfolded. I'll go back to the 15-minute chart and again show you what we were talking about a bit later in the webinar. Was as the market started to decline down here, we also had to put our larger degree support levels on again on the 15-minute chart. So I'm back on the 15-minute chart. We had a swing pivot here, so I'll right mouse click and then put the DP on. Also had a swing pivot here, put the DP on, and as you can see we had a great cluster of DP support levels, which as you can see nailed the low absolutely perfectly. Also, if you look at the ES, we had exactly the same thing here. Back from this swing pivot, we had a DP support zone on the 15-minute chart that nailed the low. So what we were saying at the time, again it's important to remember that we were actually looking at this in a live webinar, is what we were saying at the time was because there was 15-minute support came in here, if we go back to our 3-minute trade, which was now coming down here, what we're suggesting is it may not reach the typical wave 3 WPT target as initially suggested. And what John was talking about in the webinar was either running with your ATR stop, which is our red dots here. If you'd done that, you'd have been stopped out around about here for a nice 3.5 hour profit, or what he also suggested as an option was once you got into these larger degree support levels, as you can see here they are clearly on your chart here, you trail just above the bar highs, which means you would have been stopped out about here for a potential 4-hour profit. So either of these would have made a nice profitable trade. If you'd actually held on expecting the market to go right the way down to the typical wave 3 WPT, it never got back to its entry level, so you'd have actually been stopped out on close. It'd been a very hairy day to sit through the whole of this, but you'd have been about 3.5 hour profit, so that would have been nice as well. So either way, the use of our larger degree support zones here were very important, and they showed an area of where the market was likely to bounce. That was for our first trade setup of the day there, which we were looking at. Let's just clear the analysis. But then the most important thing came in after this low came in here, and it's to do with these sell setups. Now what we always like to do is trade in the direction of the larger degree trend. So the point being is that because we knew these 15-minute support zones were here, as the market started to rally up off this low here, we knew that the larger degree trend had turned from down to up. So in other words, these sell setups here, even though they were highlighted on the chart and with the STF, for a more experienced MTPredictor user, like we tried to teach in our webinars, you now knew that these were against your large degree trend. In other words, up from our 15-minute charts. Again, that's reiterated on the ES 15-minute as well, so everything was telling you that there was large degree support here and that the markets were likely to rally. So therefore, these sell setups were good ones to avoid. And as you can see, that would have been good because the market rallied quite strongly for the next few hours. I'll just move those across a bit, just take that one off because we know that was there anyway. Just take that one back as well. The only one you may have considered if you were a really experienced trader was this DP sell a bit later on. Even though this was against a blue STF, this DP sell up here was also at the end of a 5-wave sequence, so it may have been considered a trade for you. And also, if we go back to the 15-minute chart, there's the 15-minute chart, can you see how we actually had a TS1 sell on our 15-minute chart, which turns the large degree trend to down at this point in time here as well. So the point being is that the large degree trend was up off our 15-minute support here into this TS1 sell, then changed to be down. So if you had have looked at this and said, well, I fancy the idea of the end of a 5-wave sequence, I like the idea that this is a DP automatic sell as well. Whoops, sorry, didn't mean to do that. I meant to put the analysis on. There we go, analyze setup. You may have wanted to consider this trade as well. And as you can see, that would have been a nice 2.3 hour profit. As the TS1 sell on the 15-minute chart indicated the large degree trend was down, you'd have avoided these buy setups and may even have wanted to hold your short trade, possibly into close for a nice trade here for possibly 3.9 hour profit there. So hopefully this has been a good video to show you how important it is to always look at your larger degree trend on your higher time frame charts, and when you do that by using your DPs here in your MTPredictor software program, remember these are leading indicators, these are on the chart before the market even gets there, these help you define what the large degree trend is, and once you do that, it will help you filter your standard trade setups that are on your chart already, and as such allow you to make some good trades that are in the larger degree trend. Again, I want to stress that particularly this first one here, we were actually talking about in our live training webinar yesterday, a recording of which is available in the members section of the MTPredictor website for MTPredictor customers. So hopefully this has been a good video here to show you how you can use some of the more advanced tools in the MTPredictor software program to gain some good trade setups based on your shorter term time frame, with the large degree trend helping define, or the large degree charts helping define your large degree trend. So a great example of how this all fits together yesterday on the USE minis, particularly on the YM yesterday.